So here we are in another example, and in this case, we're going to be taking a look at the monthly and daily model. So this is the more positionally trading, so trading using the daily as my entry time frame. So you can see here, we had a candle 2 closure, and then it consolidated, right? We came up, we manipulated the highs in the consolidation, we have a change in the state of delivery, right? And so if we have all of that, why would I want to see the lower half of this wick, not the wick, but the whole candle be respected? Well, once again, if we're closing down in here, do I want to see price go all the way back up here? No, because if we do that, we've swept out the low in a consolidation, trading back into the range, more likely to take the high. So I want to use this area, which is 0.5 of the whole candle from high to low. And so in that area, do I have a point of interest? I do. I have a fair value gap right here. That provides the intra-candle change in the state of delivery, and that provides the continuation lower. Now, that would be candle 3's expansion. Let's get into candle 4. So here we are in candle 4. Why would we be looking for a continuation? Well, candle 3 closed nice and bearish and below candle 2. So with that, I can expect 0.5 to be respected. What is in that area? Right here. Well, we have a fair value gap, as well as what? You can also overlap it with this opposing candle here. It sweeps out these highs, closes below. So looking for this area to respect, let's go ahead and zoom out, because the most important part is having a drawn liquidity or where you want it to go. Right here we have these lows. So if I want to trade this more positionally, I want to get an entry in here, targeting there. Where would be my invalidation? Well, I don't want to see price disrespect 0.5 of this or go much above that. So I could look to take an entry anywhere in here. I stop either on this high, like so, or I could even take an entry a little bit lower with my stop, giving it room to trade into that fair value gap. So something like that, 2.56R, and there we go. Now let's say I wanted to wait for the intra-candle change in the state of delivery in candle 4. What would I do there? Well, I'm wanting to anticipate when this wick would form. So instead of taking an entry right away or more positionally, I'm going to let a candle closure tell me what is up. And what do we notice here? We have a candle 2 closure. And why is that an ideal closure? Well, because not only does this form the swing, but it also forms the change in the state of delivery intra-candle for these opposing candles. So now I can anticipate this wick to have formed right there and can trade that lower. Or what can I do? Similar to the silver example, right? We have the daily, can look down on the hour. Now I can use the daily candle closure. So trading candle 4 on the monthly, trading candle 3 on the daily. So going down to the hourly, right? We'd expect what? If we want to see a continuation lower from where? We can mark out 0.5, or not 0.5, but these daily order block. And 0.5 of this whole candle here, right? So wanting to see the lower half be respected in here, we have expansion. We have a gap down. So if this to me is looking like expansion into more of a retracement. So here, do we go and close below here, in which I can get a continuation entry, or if we consolidate, run it out again, I can get a new one. So more of a consolidation. Here we run the high. And what do we notice here? We have, once again, an ideal candle, either 2 closure or 3 closure. Ideal candle 2 closure, right? We sweep out the high, and then we close below here, right? So this is when, if I wanted to take an entry on the hourly, I could just enter there. I stop on this high, and that is how I could refine my entry from the hourly to get a lot more risk to reward, right? Because now I am using the intra-candle change in the state of delivery to anticipate this wick to have formed. Right? So let's see how this plays out. Retrace back up into this level, as well as that fair value gap. But then we have a new opposing candle. This is when I could then either trail my stop to there, because now we have a new protected high, or leave it. Let's see. And there we go. Into the next day, it goes and continues to those lows. So hopefully that is an example of, it is fractal, right? So what you saw me do on the daily, hourly 5, I can do on the monthly, daily, hourly, right? Or I could even refine this down, right? What happens when price comes into here? and forms a swing, well, I can look for my lower time frame fractal model here. Or we then form a new opposing candle here, right? I'm expecting 0.5 of this to hold, right? Do I really want to trade after the expansion, after the lows are taken out? No. Let it retrace in. Do we form a new closure? We do. Go down to here, go on the 5-minute, right? Here we are on the 5-minute. Do we have candle closure? We do. And what do we notice about this? I'm not expecting these highs to get taken, right? Because if price goes all the way up to here, it's just going to take this high as well. So then I can, after we get the change in state delivery here, and use these opposing candles. So if I wanted to enter positionally or just be in this, enter there, put my stop there, and then could look for 2R, or if I'm doing all this work to refine down, I can still keep my higher time frame targets and hold runners to there. Right, so let's see what happens, or if we can get a lower time frame intra candle change in the state of delivery entry, right? And right there, right? I'm expecting this to hold, and we go have a nice candle 2 closure here, up in the upper half, not upper half, but the lower half of this, but in this upper part here. Right, we haven't had that intra candle change in state of delivery because we haven't closed below there. Or did we? Let's see. Not quite yet, but that would probably be enough for me to put on a position. Right. And we'll just go to 2R because I don't want to drag it. And there we get the closure, right? So then that would be the intra candle change in the state of delivery entry. So then look for 2R or to this low. There's 2R. We take the low, and then I could hold runners to there, right? And we can let it play out, right? Be here a long time, so I'm just going to go to the hourly, save us some time. And, you know, that is how, if you want to get higher risk to reward trades, it's not about taking stuff that's super risky. It's about keeping your higher time frame targets and just refining your entries down.